Hey everyone, this is Josué López, the broker at Grow Mortgages. I also sit on the Los Angeles County Assessment Appeals Board. And as many of you know, from December 2021 through June of 2022, mortgage interest rates have basically doubled. So the question I get very often right now is, Josué, how can I get the best interest rate in the market? Well, have you guys ever thought of a 10-6 ARM? An adjustable rate mortgage? And I know some of you might say, Josué, isn't a 10-6 ARM adjustable rate mortgage a bit risky? Don't you recall the mortgage meltdown of 2008? I mean, of course I do. But listen, these mortgages, they're a bit different from what we've seen in 2008 from the mortgage meltdown. There's a Freddie Mac mortgage. It's not a subprime loan. There aren't any prepayment penalties. And compared to a 30-year fixed mortgage, these are typically 0.625% less in interest rate. Now, a 10-6 ARM, it's not for everyone, that's for sure. But in this video, I will explain how they work and some terminology, the right candidate for one of these mortgages, and how much money you can save on a yearly basis. So let's get to it. Here's a little on how they work. Obviously, adjustable rate mortgages are a lot more complicated than your traditional 30-year fixed mortgages. A 30-year fixed mortgage has a set interest rate for the life of the loan that does not adjust, while 10-6 ARM has an initial 10-year fixed period. After this initial 10-year fixed period, the interest rate will fluctuate either up or down based on its adjustment index. An index is a benchmark interest rate that reflects general market conditions. In this case, we use the secured overnight financing rate. We know it as the SOFR. ARMs also have adjustment frequencies, and this refers to the 6 in the 10-6 ARM, which means that after the initial 10-year fixed period, the ARM will adjust every 6 months for the following duration of the loan. ARMs also have margins. The interest rate is created by adding the SOFR index to a fixed margin. For example, your adjustable rate might be the SOFR index plus 4%. That 4%, we call that the margin. There are caps, which refer to the limit the interest rate can increase during an adjustment period. And there are ceilings, which is the max the interest rate can adjust during the life of the loan. All right, so now that you know a little bit about how ARMs work, let me tell you who the perfect candidate is for an adjustable rate mortgage. The perfect candidate is a short-term homeowner. That's somebody that's looking to maybe upgrade their property within the next 10 years, or they're looking to sell their property to relocate because of work. But it's somebody that won't be keeping the home for more than a decade. Another great candidate is that borrower that wants to pay off the mortgage within 10 years. So they may run into like a lump sum of money. Maybe they'll sell another piece of property and they'll use the proceeds to pay off the mortgage within the 10 years. Or maybe it's that borrower that makes accelerated payments every single month and they're looking to pay off the mortgage within the 10 years before that mortgage goes into the adjustment period. Bottom line, if you're looking to move or relocate within 10 years, or if you're looking to pay off the mortgage within 10 years, then a 10-6 ARM might be the right mortgage for you. So how much can you actually save? Well, based on my math, at a lower interest rate of 0.625, for every $100,000 on a yearly basis, you'll save $456. So on a $400,000 loan, you'll save $1,824 per year. On an $800,000 loan, you'll save $3,648 per year. And I know that may not sound like a lot, but with inflation running wild, that's a whole lot of gasoline that you could have in your gas tank. And really, a dollar saved is a dollar earned. Like I previously mentioned, an adjustable rate mortgage, it's not for everyone. And it does have some risk. However, this might be the right product for somebody you know, or maybe even for you. If you'd like to know more, or if you have specific questions on a 10-6 ARM or questions on a 30-year fixed mortgage, then send me a message or give me a call. Again, this is Josué López, the broker at Grow Mortgages, signing off.